XDC network has been taking a hit lately, and the charts don't lie. The live price data shows XDC down roughly 7.7% in just 24 hours, which is a significant drop for a coin that has recently been in the spotlight for its partnerships and growing influence in enterprise blockchain. But before jumping to conclusions, let's look at the bigger picture. The broader crypto market is also in decline, with the total market capitalization dropping around 4.76% during the same period. Bitcoin dominance has risen, meaning more money is flowing out of altcoins and into Bitcoin, which often happens during times of fear or uncertainty. In fact, the overall sentiment in the crypto space right now sits at a fear level of 36, showing investors are on edge. When fear takes over, even strong projects can see heavy sell pressure, and that's exactly what's happening with XDC. But the fundamentals tell a different story. Behind the red candles and panic selling, XDC network has been making some powerful moves. One of the biggest headlines is XDC's acquisition of Contour Network. This is not just any small partnership, it's a major step into the world of global trade finance. Contour has built strong connections with major banks and corporations, helping to digitize and modernize the trade finance industry, a sector worth trillions of dollars. By acquiring Contour, XDC isn't just improving its image, it's expanding its footprint into real-world finance. Another key development is the integration of USDC into the XDC network. This is one of the most important steps toward real-world usability. USDC is one of the most trusted stablecoins in crypto, widely used across decentralized finance and enterprise applications. Integrating it into XDC means more liquidity, easier transactions, and greater utility for developers and businesses that want stability without dealing with volatility. It opens the door for smoother DeFi interactions, faster cross-border payments, and even larger financial institutions being able to interact with XDC more comfortably. It's the kind of move that strengthens the ecosystem from the ground up and sets it apart from other enterprise blockchains. Yes, the 7.7% daily drop looks bad on the surface, and the market's current fear adds pressure. But the bigger picture tells a different story. This isn't a coin losing relevance. It's a coin building momentum behind the scenes while traders panic in the short term. The fundamentals are stronger than ever, and the strategy being executed by the XDC team shows vision and patience. Volatility is temporary, but vision is permanent. What we're seeing right now could simply be one of those shakeouts that test investor conviction before the next major move. And in crypto, those moments often separate the traders from the long-term believers. The biggest gains don't come when the market feels safe. They come right after everyone gives up. XDC might just be sitting in that exact moment right now, oversold, undervalued, and quietly preparing for what could be its next big breakout once the fear fades and the fundamentals start to shine through. XDC network is an enterprise-ready, Layer 1, EVM-compatible, open-source, hybrid blockchain protocol specializing in tokenization for real-world decentralized finance. It uses a special type of delegated proof-of-stake, XDPRS, for consensus to ensure quick transaction times, minimal gas fees, and a remarkable 2,000 plus transactions per second, TPS. XDC network is backed by the XDC community, leading to the formation of the XDC Foundation, which was established in 2021 to promote the growth and adoption of XDC through collaboration with a community of developers, trade experts, and content creators. XDC Network is a high-performance blockchain platform built for enterprise use in trade finance and asset tokenization. It uses the XINFIN delegated proof-of-stake, XDPRS, consensus mechanism, which involves validators performing a small amount of proof of work, POW, when proposing a new block to achieve consensus. This method ensures the network consumes minimal energy and is highly resistant to spamming. XDC network architecture. XDC's delegated proof-of-stake also uses real-time voting to choose a pool of validators who are responsible for the following: ensuring the integrity of the XDC network, converting transactions into legitimate blocks, keeping their notes in sync with the network all the time. In each 900-block iteration, known as an epoch, a checkpoint block is created solely for implementing reward processes. This block, referred to as the block signer, holds all block signatures. Block signers are responsible for tallying the number of signatures sent to the smart contract during the epoch, and rewards are based on the number of signatures associated with a masternode. Block creators are chosen in a circular and sequential order, ensuring every masternode holder has an equal opportunity to create and sign a block. In the current XDPRS implementation, if a masternode fails to create a block, there's a 10-second delay before the next masternode in the sequence takes its turn. There's also a reward sharing structure among coin holders and masternodes elected with coin holder support.